we're going to be going over everything you need to do to basically become profitable. This will be anything from the strategy that I teach to everything psychology based. So this is the roadmap to profitability. Now, if you guys seen my YouTube video before this overall breakdown of GERB strat, this was basically a simple introduction to my strategy to the basics of trading, just simple support and resistance. So I'm going to go over very briefly, just kind of the strategy real quickly. If you want something more in depth, I would recommend to watch that video, but we're just going to go over everything real quick. So like I said, the foundation of the whole strategy is just support and resistance. You have highs and lows, however you want to call it. If you want to call it liquidity, if you want to call it data high, data low, all of it's just rebranded the same shit. It's going to be support and resistance at the end of the day. The way we trade, or the way you mark the levels, you see where prices where point has reversed, you will mark it as support and resistance. So this is each place where you see price reverse off of will be a point of rejection or reversal, and you would mark it as a level. So for example, if you guys see my cursor right here, this is a level. However, we got a break of structure continuation. You see now this is a level, we retest it reverse, this is a level, retest reverse type of thing. And you'll see how mark resistance is the same thing. Retest reverse type of action. This is the level, this is a level, this is a level, this is a level. So literally any point where you see reversals on the chart or where price reverses, even though it's not going to be a reverse for the whole day, as in this is what made the day bullish from here, bearish from here, any point of a reversal is where you mark a level. It's as simple as that. Now, breaking structure is basically just a close above a level of support and resistance, and it's continuation. A lot of people fuck this up. Breaking structures are not entries. They are only to let you know, hey, we're continuing. Keeps it very simple. You would want a retest of support. Boom, this is your entry. You play for breaking structure. You already have a good risk reward. You get the close above. Instead of taking profit there, where it's like, oh, we might have resistance there, you get a close above, and you're like, okay, you know what? This can continue. So you hold your trade, and you bag that hoe. So leave it like that. Inverse breaker structures. Now this is very important to focus on using it on reversals. Now inverse breaker structures is a setup that you can take an entry off of. But understand, when you're trading in the middle of a range, middle of the chart, any trade you take, no matter what it is, it's lower probability than a reversal would be. You can see that this inverse breaker structure was, in a sense, bottom tick vibe or bottom of the chart before he ripped up. This one, it still played out, but he had zero follow through behind it. So playing an inverse breaker structure where it's going to be also set up as a reversal will be your best bet, best probability of playing out, best risk reward. Overall, just the best time to play those type of trades. Key levels: you have pre-market high, pre-market low, after highs, after hour lows, high day, low day, yesterday's high or previous high and low. Basically every fucking thing that you could think of that's a if it's the top or low of a range is a key level. So you'll see these recent support levels. They aren't key levels, however, they will still be levels that you would possibly use throughout the day, but not key levels where you would want to take trades off of. Things like a retest of pre-market low to pre-market high, or pre-market high to pre-market low are trades you would want to look for. Entry and exit. This is very, very simple. Very simple. So we'll go back to this chart. If you enter a trade off pre-market high and you're playing shorts because you're playing a reversal, this is your entry and your stop is right above the level. Why? Because if you are taking a short at pre-market high, any higher means, hey, we're not going to reverse off here. So that is why your stop is right above the level. Not at the level, because if it's at the level, majority of the times you're going to get stopped out because that is where you're looking for rejection. And it doesn't make sense to have a stop loss where you're looking for price to reject. You know what I mean? Retarded. So overall, that is just the simplest way to do it. Entry at the level or a little bit below the level, stop loss a little bit past the level. Obviously, if you have a shitty entry, your risk reward or your stop is going to be higher. So if you enter down here and now you still have to put your stop up here, that is on you. And if your stop is so high or your risk reward is so shit, that alone is telling you maybe I shouldn't be entering here. Maybe I should wait. If I miss the setup, I miss the setup. This type of strategy will give you, on average, 5 to 10 trades a day. And that's not bullshit. A lot of other strategies, step-by-step process like ICT, you're going to have one setup, and that's if you get five different fucking confluences back to back. And again, that just not only is the win rate shit, but the probability of you getting that consistently is also low. Risk management, same thing. You have usually the way I will manage my risk, besides having a stop loss, is after TP1, which is 4 to 5 points on ES or 20% on options, I go break even. A lot of the times after TP1, price will reverse, and that is why that is something that is the structure and foundation, which I will go over. This is very important to have in when we go over psychology. Now psychology. So we're just gonna have a quick yap sesh. Psychology is overall just anything mental in trading is not because of the charts, it's because you mentally are weak-minded as a person or as an individual yourself. If you're greedy as a person, the charts is going to bring that out of you. If you're impatient, the charts are going to show that. If you're undisciplined, if you have poor execution, if you're inconsistent in your life, all these traits as a person will be shown when you're trading. So it's not that trading is making you greedy. You know what I mean? These things were already there before. Trading is just bringing it out. Trading will put you under certain emotions that you haven't been exposed to before. So it's your first time feeling these things, feeling greed, feeling what tilt, revenge trading. All these things are normal, they're human, whatever. But all these things are also obviously why you're going to be losing. Having a simple strategy like mine is only going to set you up to understand what is throwing you off. When you have a strategy that is a little bit more complicated, it's going to do two things. One, it's just going to overcomplicate the strategy itself, causing inconsistencies, low win, all that, anything strategy based, it sucks. But that is also going to lead to a shittier psychology because it overcomplicates now your thought process on how you need to execute, when you need to execute, and all these things. Uh, so now, with that being said, it makes sense to have a simpler strategy so it can translate to a simpler psychology. Think about, I always refer to a science experiment. When you're having a science experiment, the more variables you have in your experiment, the harder it's going to know which variable is throwing, your conclusion off. So when you have 20 different confluences that, what do you call it, contradict each other, you have to go through all those 20 confluences to know, hey, this is what's inconsistent, this is what sucks, this is what's I need to remove from my program. When you have something as simple as support and resistance, and it's basically more focused on human error than it is on the strategy, now you know that all you have to focus on are the variables of human error, whether it's your mental, your execution, your discipline, all these, instead of having to focus on the strategy and all of these on top of that. See what I'm getting at? So now, everything when you do, like I was relating back, is everything you do outside of your life will reflect on the charts. And so now the biggest thing is how do you, you know, how do you improve? How do you work around this? How do you get better? Now, I do the mentorship with my students, and this is everything I tell them. So this is literally dead ass everything that they in a way pay for to learn is going to be in this video. Now that doesn't disregard any value from the mentorship because again, it's very broad and you still have to find everything yourself. But this is how the whole structure or layout of the mentorship works. So after you get the strategy down, now it's fully based on your psychology and your mental. So again, what do you suck at personally that is throwing off your trades? You have to figure that out first. And to be honest, the way you figure it out is by losing. No mentor is going to be a better teacher than you losing a trade. You losing a trade will teach you more and will stick to you more than anything a mentor will say, no matter how much you pay or what they tell you. And that is a fact. The way I personally learned was through losing. I didn't want a mentor. I didn't have a mentor just because um, I didn't see people doing numbers I wanted to do or being consistent on the way I wanted to see consistency. A lot of them were just kind of bullshitting here and there. So I wanted to actually be obviously the greatest, and by doing that, I had to lose a shit ton. However, a lot of people, their mindset is completely fucked. And the number one thing of trading is if you have a bad mindset, it's not going to work. And that's anything in life. Anything, whether it's business related, life related, work related, however you want to put it, that's everything. Now, when you have a shitty mindset, obviously that is where things start to go downhill because everything has a negative outcome instead of you having a good mindset and turning everything that's a negative into something that will only benefit you. Every loss I took, every red day I took, everything I took that in a way would be seen as a halt to my progress, to me getting further away from profitability, all these things, right? It's as simple as every losing trade was teaching me a mistake that I had to learn from. Whether it's something as simple as, oh, I over leveraged and I lost a shit ton, it's as simple as let me set a limit so I don't over leverage anymore. You know what I mean? So you analyze the mistake, you find the mistake, you find a fix to the mistake, you don't repeat it. Now that layout is very, very simple of what you need to do to become profitable, but now what people suck at is their execution to actually stay consistent with not over leveraging. Now with certain props, obviously you can limit yourself, limit the times, the sessions you trade, how much contracts you trade, the pairs you trade, all these things. But honestly speaking, profitability is bare minimum shit when you're trading props or just trading in general. So that leads me to another thing is standards. If you have shitty standards on as a person in general, you're going to have shitty outcomes. If you don't, goals, in my opinion, are not supposed to be reached. When you set a goal, it has to be a goal for a reason. Goals are not supposed to be reached. You're supposed to set a goal so far out of reach where even if you achieve it or work towards it, you're never going to achieve it. For example, let's say you want to hit 5K a month, which is very, very doable, and someone sets 10K a month. When you get to 5K a month, you're going to be comfortable, you're going to be happy because you hit your goal. When you hit the 10K month, let's say you get 7 to 8K, and you don't hit your goal, you're not satisfied. You didn't reach your goal. However, you still did better than the person that set goals at 5K a month. You see what I'm getting at? So when you change your perspective and set your standards at a higher point where it's just out of reach, it leaves you with two things. One, you're not comfortable, so you always want to improve. Two, it puts you in a better spot than people that are comfortable. Now, again, profitability is bare minimum. If all you care about is being profitable in trading, to be honest, trading is not for you. Trading is to be giving you the freedom and giving you basically to do whatever the ability to do whatever you want whenever you want. People will sit on the charts from 9:30 to 4, which at that time you might as well just work a fucking 9 to 5 because that's exactly what you're doing. Defeats the whole point of trading when you're doing shit like that. Now, with that being said, going back to backtracking a little bit, backtracking a little bit on the layout of how to turn profitable, of finding a mistake, learning from it, not repeating it. I've always said this to my students where if you had only 50 mistakes to make, how fast or how quickly would you want to fail 50 times, learn from all those mistakes and never repeat them again. So again, if you change your mindset, have a positive outcome on what you when you have a losing day and you learn something from it, that is the biggest thing. That is a winning day in my opinion. Progress should not be determined on a payout, on if you're profitable or not, on your account balance, on in a way your win rate. Everything needs to be progress is really, shown by really your psychology, your discipline, your execution, your consistency. And then your win rate, your money, all those things will follow because of that. Not one person. I mean, we've all seen, probably even in the Discord, there will be a retard that gets a payout and can never do it again. Why? Because anyone can get a payout, but they can't keep a payout and they can't continue getting payouts because they never had a foundation that was consistent or sustainable for them to build off of and to continue that thing. That is why a lot of people fail, is because anyone can make money trading, but not everyone can continue to make money trading. They either get egotistical, they get excited, they get greedy, whatever the thing is, that is what's going to throw it off rhythm. So I've had a student where he was doing really well, you know, and then let's say they might have a minor setback. So let's say they're doing 20K a month. They had a one minor setback. And instead of just picking back up to where they were to build basically everything they did to build a foundation to get to 20K a month, they completely dropped. And they try to rush evals, rush the process to get back to funded, to get back to the process of let me chill at 20K a month again. It does not work like that. As soon as I told them, hey, bro, all you have to do is literally go back to what you were doing to get to that point, he got a payout and was consistent within 2 weeks. After spending maybe 3 weeks to 4 weeks just blowing evals because all he was rushing and he wasn't sticking to his foundation and what he knew and the structure that he had built. So having a structure, having a foundation when trading is the number one thing in trading really. That foundation is what's going to be there for you when you're making $200 a day, 2 grand a day, 20 grand a day, 200 grand a day. Does not matter how much you're making, but if you do not have that foundation, it does not matter. I've told people in Discord that everything that I tell my students to do is everything I do personally. I don't do anything different than obviously what I'm going to tell my students because there's no point. But also, like me taking profit at 20% every single day and then going break even is exactly what you need to do when it's just 4 to 5 points for $200. It's very simple when you also change your perspective. And if you have respect for yourself and the hours that you work and the effort that you put in at your 9 to 5, respectfully, $200 would mean a lot to you. And if I told you you were guaranteed $200 every single day for the rest of your life, and all you had to do was this, and this, basically TP1 break even, rinse, repeat, you could do it. That is 2K a week on a Lucid Eval or Lucid Flex, 50K Flex. 5 accounts is 10, 10 accounts with Tradeify is 20. Now you're making 20K a month just by $200 a day TP1. It's really, really simple shit. Again, though, that foundation is going to be consistent throughout all those accounts. All you do is build the foundation, get good at it, be consistent, you scale. Now you have a new foundation that's a little bit more leverage, but overall everything is the same. New account, scale up, new foundation. New account, scale up, new foundation. Rinse, repeat. That is what scaling is, and that's how you grow capital, and that's how you grow again that consistency behind it. Now I'll tell you one thing that will change your life, and honestly speaking, it is going to the gym. View the next slide. Going to the gym is very related to trading more than anyone will realize of how connected they are. Not only is it great for your health, and I could honestly care less for you looking great, or you looking great, or you feeling great, or you being healthy, trading and gym go hand in hand at more mentally than anything else. When it's compared to patients seeing results. When you first go to the gym, first 3 months will be the best results, your highest returns. You'll be on a drive because you're seeing results and you're seeing quick gains in a way. When you first start trading, what happens? You get that same kind of rush. Oh, you're just doing shit randomly and you're somehow winning. And then as soon as those results stop, you want to quit. After those 3 to 6 months at the gym, results slow down because your body now gets used to it. And guess what? Now you have to be patient and build a foundation to understand how to grow. What do you have to do in trading when shit starts going downhill? Figure out what you're doing to build a foundation to start to grow. Now that's cleared. Everything that you do to go to the gym, when it's wake up every day, get your meals straight every day, get ready for the gym, go to the gym, execute everything every single day consistently on a routinely base or on a daily basis on a routine is everything that's going to be for trading. Waking up, for example, if you want to trade open, waking up a good hour before open, clearing your head. If you want to do your roadmaps like I do, go for it. It's basically setting everything up to get ready for open, as in you would get ready for the gym. Then things open up, then you execute, you make a mistake, you learn. Same thing at the gym. If you're not seeing results, you figure out what is holding you back, you learn from it, you improve, you switch things around, rinse, repeat. It's literally the same exact shit, just different, two different things. Now, a lot of a lot of things that require or a lot of personal traits that require you to be good at the gym is going to carry on through trading. Every single student that I had said to go to the gym, they had seen more progress within the first month of them going to the gym than they did within the 3 months of them trading on their own without going to the gym. I don't know how to explain it, but as soon as you start, again, fixing everything outside of your life, it's going to reflect on how you trade. Anyone can be a 9 out of 10% or 90% win rate or 9 out of 10, trader, but as soon as they let their mental slip or they let their risk management go to shit or they let their structure fall, all of it just goes out the window and it's completely back to square one. Again, building a foundation is going to be your number one thing to profitability. And it's as simple as that. I have some questions from the Discord that people wanted me to go over, so I'll go over that from the YouTube video. Okay. Common mistakes: greed, FOMO, overtrading, overconfidence, early exits. I guess just fucking everything. Jeez. Okay. Common mistakes. Now, what are common mistakes? I think I don't know. Common mistakes are honestly everything. It's so broad, but I'll start with FOMO because I think that is one of the most common. Some of these mistakes that people make when trading is nothing more than again building the discipline and executing off of it. No matter it's not even anything technical, it's not even anything on the charts. If you cannot do these things on your own, you will not be profitable. There's literally no advice I can give besides of course building your foundation outside of trading. But again, if you do not display this onto the charts and actually execute, because some shit you literally there's nothing else you can do to improve on it except you just do it. Like, let me not have a fear of missing out because I know there's going to be a setup within 15 minutes later. Let me not overtrade because I'm already up on the day, and let me call it a day because trading is supposed to be, you're in and out type of vibe. Greed, the same thing. If you're a greedy person in general, that is not because of the charts, it's because you're a greedy person yourself. So, again, you have to analyze everything outside of the charts on why are you greedy? Why are you lacking discipline? Why do you, not wake up and perform 100% every single day type of thing? This is going to be every single reason why that you can't do the same shit onto the charts. Um, Revenge trading, FOMO, there's more shit like that. Again, it's as simple as executing. Um, it's really hard to again give advice on things like FOMO and revenge trading because it's literally it's not easy, but it's as simple as you just don't. I think having a structure and a foundation to build off of is what will help, you know, not not revenge trade or just start throwing trades just left and right because you have a system that you follow. And it's about building it's think about it muscle memory. As soon as you see 4 points, you're automatically trimming or you have a limit set as soon as you enter. That a muscle memory thing where you do not have to think, you just start executing because you've done it so many times and you've built the consistency and you've built a foundation where everything is just you just do it. You don't think about it. And I think once you start to train your brain that way, everything will start to fall together. And because again, you are building that foundation, which is what will carry you in the long run. The other person said trusting your conviction. Now, trust, in my opinion, trusting conviction is iffy because at a beginner stage, your conviction or your gut feeling or whatever you want to call it is completely invalid. Like honestly speaking, you don't know what the fuck you're talking about. Majority of you guys suck. So what you think not is is not there or it's not real because you don't have the experience to. Now that leads me to another part of trading is honestly a lot of it is experience. Now can you queue or can you shorten that amount of time needed to experience what I do in a short amount of time? Yes. It took me 3 4 years to perfect my strategy, to perfect my skill of reading, to perfect all this, but I've had students do it in 3 months. Shout out Gooning Media. He's done first payout in 3 months. Then he hit what 325K in 7 days. I think like a couple weeks ago. Like that shit's insane, and it's only been around 6 7 months. Pause. 6 7 months of him actually trading. But let me tell you why. The reason the student has done the best out of all students I've had is because his execution was on point. He learned a mistake. I told him, "Hey, don't do this, don't do that. This is what you need to look for. This is how you execute. This is the type of trades you take." And he's like, "Okay, got it," and did it. Now, obviously some students will let things get in the way. But also, he was going to the gym. He quit smoking. He did everything that he needed to do to become a better trader, he would do. Off rip, no hesitation, pre execution. And that is why he was able to not only see results very quickly, but scale very quickly. And that is also why he has retained the same foundation since pretty much day one. So it's stuff like that, like I'm saying, is as soon as you have that structure, scaling becomes so quick and just run with it. It's very, very simple. Now, when I was going back with experiencing, is conviction happens through experience. There's nothing more than sitting at the charts 9 to 5 to learn from that. It is brain rot, it is brain frying, but it's also different to know what you are looking for. And because what people fuck up is, oh, time on the charts does not equal experience when you're fucking gambling. Like, you know what I mean? When really in reality, if you're trading every single day, 9 to 5, what is that? I'd say almost like 8 hours a day, right? 9 to 5, 8 hours a day. You're out of those 8 hours, 7 of them a day, 35 hours a week. You're fucking gambling, and maybe 1 hour you actually try to do some shit that was logical. So again, really realistically speaking, now you only spent 5 hours out of the whole week actually doing some shit that will benefit you, and the other 7 hours or 35 hours was on some bullshit because you did not know what you were doing, you did not know what you were looking for, and stuff like that. So it's stuff like that where you need to understand quality in a sense over quantity, but again, you can improve a lot very quickly if you focus on that. Another person said, "Why is it important to show up every day and not quit?" I mean, honestly speaking, this is very self-explanatory. Anything you do in life, if you quit, I'm being so straight up, you're just a fucking loser. There's literally no way to put it. You're a fucking loser if as soon as you see a halt or things not go your way, that is everything why trading won't work out. And it doesn't even have to be trading. Anything in life, again, if you were to not show up every day and quit, anything in life that you do will not get done. And you won't be successful as a human being. And you won't ever be fulfilled as a human being. Because again, if you can't do it on trading, you're not going to do it at the gym, you're not going to do it at work, you're not going to do it with your wife. You know what I mean? So, if you even get a wife, but it's consistency over anything, even if it's failure over failure. Again, cons- being a consistent failure is not a bad thing till you let it end up in a cycle. If you were to consistently fail every single day, but at least you were learning to improve, little by little, you would start to see that consistency every a failure every day turning into winning. But again, it's because you let that cycle, like if you let that cycle continue, it's going to continue. So, um, and that's pretty much it. If you have any other questions, ask through the Discord. I just throw everything at you guys. But I guess the key takeaways from this video will be this three things. One, foundation. So building structure in your life is what's going to be the number one thing to take you far. And I've always told my students, if trading is not your thing, everything I've taught through the mentorship will be everything that you need to become a profitable trader. Or not, sorry, to become a successful person. So even if you want to own a business or, run an OnlyFans, you have to make content every single day type of thing. You don't just, you know what I mean? You can't just fucking stop. So no matter what avenue you go, you have to stay consistent and have a foundation to build off of. Two is, I guess, with foundation of mental or psychological traits of your discipline, execution, consistency. Go to the fucking gym. Like, stop being a lazy piece of shit and smoking weed and just watching the charts. It's depressing. Um, I used to just sit on the charts. I was depressed. I went to the gym. I improved. I mean, it's 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 my experience, and out of every student I've had, it's been their experience as well. So it's just you just got to get up and do it. Um, and three, I would say the biggest thing is mindset. Like I was saying, is having a good mindset on, you know, your your point of view on the world as well as trading is what's going to take you far. If you treat everything as more of a lesson and treat it as um an opportunity to improve, that is what's going to take you further than you just taking a loss and being fucking bummed out about it so you go jerk off later that night to feel better. You know what I mean? It doesn't make sense. So you need to analyze your mistakes, find a fix, learn from it, rinse, repeat that process without repeating those mistakes. That's pretty much it. I love you guys. I'll see you in the live. Peace out.